Welcome back. I'm Pratap here. Today is the 26th December 2024. In this video, I'm going to evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. And you know that the cost of the training is over 8,000 US dollars and we are providing complete free training. And all the training lessons you can access at our NeoStock YouTube channel. At our channel homepage, please click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other very important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. The previous end of the day report, we identified 6 daily and 75 minutes high liquidity zones. And we got very good, three very good trades from these HLQ zones. The first one is MFSL. MFSL, Max Financial Services Limited. This stock is a 75 minutes high liquidity zone. This is the zone identified by our NeoStock software as a rally base rally. It is having two base candles. And this 75 minute zone is fine tuned with 15 minutes time frame. Look into the 15 minute zone. And here the structure is not good. The 15 minute structure in this area. And all these are all so many base candles. 1, 2, 3, 4, 5, 6, 7. Many times, such kind of zones will be violated unless institutions decide to create a new order flow inside this zone next time when prices are entering into this area. Otherwise, zone will be violated. But this zone is not violated. Institutions cleverly created new order flow in this zone in the next retracement. So where is it? Let me show you that. That's why we are saying such kind of zones, 80% they will be violated. But 20% scenarios, these new order flows will be created by the institutions. And see here, institutions created a failed ERC candle, rally, base, rally. This is the leg-in, this is the base, and this is the rally. And this is the area you should plan your trade. And moreover, prices came very close to this zone, inside this fine-tuned area, and then prices were started moving up previously. That means prices did not enter. That means this is an indication that this area, the institutional order flow, is very, very strong. This is the first price action flow. And this zone is not tested, not yet tested. Even today also it is not tested, but still it gave a trade with entry buffer. See, I have drawn a blue color line. Okay, even before that, where is the fine-tuned 5-minute zone? This is the 15-minute zone. But we have to plan our trades in the fine-tuned 5-minute zone. So go to the 5 minutes time frame. Within this 15 minutes area, we have rally, base, rally. This is a medium size candle, you can assume, or a little bigger than medium, whatever it is. This can be considered bigger candle. This is a leg-in. You have a base candle, you have a rally candle. This 5 minutes area you have to plan your trade. But is it tested? No. Earlier also prices came almost near to the zone and moved up. Why? Because the institutional order flow is very strong. And also notice here a rally base rally is created. This is a failed ERC rally base rally. That means this area institutions are adding new order flows into this area. But this is the origin. The origin you should not forget. This is your actual area where you should plan your trades. Because a new order flow is added, definitely you must keep entry buffer, a small entry buffer. So this is the entry buffer added today. Prices entered a little below this entry buffer and then started moving up and finally reached the 15 minutes target. See how sharply prices moved. In which candle? Morning 9, it is not 9:15 1 minute candle. This is 9:15 15 minutes candle. If it is 1 minute candle, mostly we missed our trade. Go to the 1 minute. Exactly in which 1 minute candle we got the trade. We got the trade at morning 9:17 candle. So it's a very clean and neat trade. 9:17 it picked up the orders and then see how sharply the prices were started moving up. And there was small struggle before this zone and finally reached the target. I know some of you with small entry buffer, you might have exited a little before. So where is our 15 minutes candle? 15 minute zone. Here you have drop base drop. All these are all ERC candles. Here you have a drop base rally, failed ERC candle as a rally created. And then the zone is again violated. Finally, it reached here. The supply is very strong, but demand is even much stronger. See how sharply prices moved. The moment prices reached here. This is 15 minutes candle level. And finally reached the target. So when it reached the target, morning 9:50 5 minutes candle. When it gave you morning 9:15 5 minutes candle. That means within 15 minutes, within 15 minutes, your trade is completed. Not 15 minutes, sorry. I think within 40 minutes. I think 35 minutes. 35 to 40 minutes, your trade is completed. And within 35 to 40 minutes, how much profit and what is the ROI it has given? MFSL has given 12,360 rupees profit, which is 7.2% ROI as per one futures margin cost. And also you have 1:3.3 RR is also there. But remember, if you don't use entry buffer, you might have slightly missed your trade. Those who used the entry buffers, your trade would have been executed today. And you would have got a very good profit within 35 to 40 minutes time period during the intraday. This is MFSL. Next one is FinNifty. Nifty Financial Services. Yesterday I explained this. How many of you attended my yesterday's? Yesterday means the previous yesterday is a holiday, right? On Tuesday evening I released a HLQ analysis video. How many of you attended Tuesday's video? If you would have attended Tuesday's video, you would have got a very good trade today. Tuesday I explained these fine-tuning these zones. This is the 75 minutes high liquidity zone identified by our software drop base rally. And this is the drop base rally. And within this drop base rally, we have 5 minutes zones. Drop base rally and rally base rally. This is at the proximal line with pro gap. Yesterday I told you this is the area it picked up the orders earlier also. Here, from the pro gap areas. And today, prices, the entire order flow in the pro gap has been consumed and prices reached our 5 minutes zone, and there how sharply prices moved up and reached the target. And when it gave the entry at 13:35 candle, 13:35 5 minutes candle, and when it reached 13:45 5 minutes candle, that means within 10 to 15 minutes period the trade is completed. Just 10 to 15 minutes period duration, and reached this 15 minutes target. We have drop based drop. And this is having 1:3.4 RR is there, close to 1:3.5 RR. Even if you did not fine tune, at least if you would have listened my previous HLQ analysis video, you would have got a good profit. And moreover, the futures margin cost is very less, around 75,000, that's it. I think 70 or 75 in between. Margin cost, one futures margin cost is very, very less. In generally, you have average future margin cost between 1.5 lakh to 2 lakhs will be there. Majority of the stocks. Few will be less, around 1 lakh, but this is one exceptional, very less. How much profit it has given? It has given 2,751 rupees. This is 3.5% ROI. 3.5% ROI you achieved in just less than 15 minutes time period. If you would have purchased 3 future lots, you would have got around 7,000, close to maybe around 7,000 rupees or 7,500 rupees profit you would have got, or close to 8,000, I think, close to 8,000 rupees. And those who invested in options, maybe you would have got even more, maybe even more, 3 or 4 times. But the risk management is very carefully how to do in options. That is very, very important. Because sharply it moved. Your time decay also almost negligible. Because it reached your target. You would have got a huge profit in options. But anyway, it's all depending on how well you listen my HLQ zone analysis videos. That is very, very important. Many people are just ignoring these videos, but these videos only will be helping you gain the knowledge, sometimes identifying the right order flows because I'm explaining them after the market. But in future, they may give you some opportunities if our software identifies those zones again. Because our software again identified this zone. Stocks near the zone, HLQ zones, because HLQ zones the next day only you have to use, but bullish and bearish trade setups you can use even after 1 week if the trend and price directions are valid. Okay, so this is about Nifty Financial Services, and one more we got that is Godrej. But Godrej carefully you have to, already earlier we analyzed, but you have to do modification to that analysis. Then only you will get this trade. Godrej is a daily high liquidity zone. I already explained how we fine-tuned rally base rally is the one identified by our software. These fine-tuned 5-minute zones I explained, but this is the one you have to identify. Here one more 5-minute zone I have drawn. The reason is because of the price action in the recent time. Have you noticed the last 3-4 days the candles are moving near to the zone? They're coming close to the zone, but they are not entering into the zone. Today also it didn't enter into the zone, but there is another 5-minute zone you have to observe here. In the previous price action, a LOTL zone is created. Go to the 5 minutes time frame, you get clarity. And actually that one is holding the prices. Even that one tested today only. But all these days before that zone, it's strongly holding the prices. That means that itself is an indication the newly created, the LOTL zone is having a strong order flow. So earlier we fine-tuned, this is the 5 minutes and this is the another 5 minute zones. I already explained in the earlier videos. This is the one we didn't draw. This rally base rally. Why? Because it picked up the orders from the fine-tuned 5 minute zone. And a rally base rally is created. This is a failed ERC candle as a rally base rally. Why I did not give importance to this zone earlier? Why I suggested you to plan your trade from this area? Because many times these LOTL zones will be violated and prices will be reaching. Many times it happens like that. Because this is the origin. Mostly I plan the trades from the origin. But why I changed my mindset today? What made me to change? Because of the recent price action. First, let me draw this. This is what I have drawn. And why giving importance to this one? Why not the one below? Because of the recent price action. Let me go to the daily time frame. You will get clarity. Daily candles. We've been seeing last 2-3 days, prices are nearing to the zone but not entering into the zone. That means somebody is holding the prices here. Generally, some high liquidity zones or some zones might be there that is not letting the prices to enter into this zone. That way you have to identify the order flows. Do you remember the concept dynamic entry buffers I explained in lesson 21? This one comes under that category. Not really, but comes under that kind of category. Why not exactly in that category? Because this is the result of this 5 minute zone is the result of LOTL zone to the previous one below this. That could be a high liquidity zone. That's why we didn't give any much importance. But the moment after I saw all these candles, last 2-3 days price action, I realized probably here there is a strong dynamic entries kind of zones might be available. Then I went back and then I have drawn this 5 minute zone. Then I realized, okay, this is the one holding the prices because prices are coming. Add entry buffer. Prices from the entry buffer area, it is picking the orders and moving. See, slowly it is consuming the orders from this area below. But means, apart from the zone, a little above, they spread the orders. See, first see the low, next lower low. See, today the lower low. It may give you one more trade also below this. Next time below this lower low, you can plan your trade. At the time, you can combine both these zones. It will give you one more trade opportunity in the coming days. Institutions spread the order flow from this zone to this zone. Okay, what is our trade plan? Then how exactly we need to plan our trade? Here we have a 15 minute zone is available. We have a drop, 2 base candles and a drop candle. And multiple times this is holding the prices. Did you notice? Probably this is acting as a high liquidity zone. Entering and again came down, prices entered, now it gave the entry. But before you plan your trade, I am taking a little inside the zone, I am planning my trade. Why? What could be the reason? Because if you plan exactly at the proximal line, you are not achieving 1:3 RR. Let me show you the trade plan, how exactly adjusted the entry. Earlier this was our entry. If you are planning like this, what is the RR it is giving? 1:2.3 RR. Can you accept 1:3.3? No. So that's why until I get 1:3 RR, I reduced this entry. Previously several times I explained this technique. So this is the entry price until I get 1:3 RR. See, 1063.70 should be your entry. You can't take your trade. Suppose if prices before the entry it moves like how you missed earlier trades, exactly the same way this one also you will miss, because RR is not there. Now you got the exact RR. If luckily prices enter, you take the trade. If they don't enter, you just ignore anyway. You missed previously. Why we didn't take all these trades? Suppose if you would have identified this 5-minute zone, even then you won't take trades earlier, because maybe there may not be sufficient RR. Maybe sufficient RR also might be there because of earlier 15-minute zone. Now this is the recent 15-minute zone. Till this 15-minute zone, you need to plan your trade. So that's why we did this adjustment. Luckily prices entered inside this fine-tuned entry level. This is, I named it as fine-tuned entry level. Why I named it as fine-tuned entry? Because this is the entry giving you 1:3 RR. Before that, if you take the trade, it won't give you 1:3 RR. So to this, inside this fine-tuned entry, prices entered, yes. That means definitely your trade executed today. If you would have planned your trade plan like this. And from here, once it reached, it then started moving and finally reached the target. And when you got this entry, at 13:35 candle, you got the entry. That means Fin Nifty and Godrej consumers both are executed the trades at the same time. That means you would have planned your trade in one of those stocks. Today you get an opportunity to plan two trades. The first one is MFSL. MFSL you got at morning 9:18 candle, and after that it completed at morning 9:50 candle. So your money is back. And after that 13:35 your prices entered into this zone, as well as Nifty, Fin Nifty also. So one of these two stocks definitely you should plan your trade. I am talking about same capital. If you have more capital, you might have taken one future in this stock and another future in that stock. I am talking about if you have a capital that is available only to buy one future, let us assume, then one of these you have selected. If you would have selected in this stock, and when it reached the target at morning, afternoon 14:50 candle. 14:50 candle, it reached the target. How much profit you would have got? 4,250 rupees profit, which is 4.5% ROA, because this margin cost is also less. This is also less than 1 lakh. I think around 80,000 rupees something is there. Okay. Anyway, this is the one you got 4.5% ROI. But remember, this is a very tricky trade. From the LOTL zone, if you planned your trade, then only if you should identify. If you would not have identified, because earlier in the analysis we didn't discuss about this zone. But definitely you should identify, because of the price action that is taking place for the last couple of days. So this is what happening. Prices are coming near to the zone by making lower lows. If you would have observed this, something is holding the prices, then you would have identified this LOTL zone. In this LOTL zone, you would have planned your trade. Next time also below the low of this candle you can plan. And from there and the below one, whatever the zone, both you can combine, and that way you can plan your entry. And below this zone could be like, below this candle low could be like the below zone adding the entry buffer. Below you have a zone. For this zone, if you add the entry buffer, probably entry will enter inside this zone. That way you can combine both these zones below this lower low. Next time, our software should identify this stock. Without identifying, if you are planning the risk, it is a 50-50 chances. It may work sometimes. Sometimes it will fail. But the probability of success is only 50-50. But if our software identifies, the probability is 80-20. 80% success rate will be there, only 20% failure chances will be there. That's why high liquidity zones always the success rate is more than 80%. See this month, how many trades are stopped out? Very few. You got very good profitable trades this month. You got 1, 2, and 3. The same stock, M&M Finance, 2 order flows violated on that day. Only 3 stocks are violated during this month. Remaining all the stocks we got profits. So this is about Godrej consumer, which has given you 4.5% ROI as per one futures margin cost. And remaining stocks we did not get, but how I fine-tuned, OIL is a daily supply zone, high liquidity supply zone. We have a drop, 2 base candles, and a drop. This is identified as a high liquidity zone. And this zone is having a lot of institutional order flows. Go to the 75 minutes. In the 75 minutes, you have this ERC, failed ERC candle as a leg-in. You have 1, 2, 3, 4 base candles, and then a drop candle with hidden body. This is 175 minutes. Another 75, rally, 2 base candles, and a drop candle. And these two 75-minute zones are fine-tuned with 15 minutes time frame. You have multiple 15 minutes zones here. You have a failed ERC as a rally, base, a drop. Again you have a rally, 1, 2, 3, 4 base candles, and the 5th one medium part of the base, and a drop candle. And here you have a rally, base, drop, and somewhere you have a 5 minutes. This is the 5 minutes that we will see in 5 minutes time frame. Now go to the 5 minutes time frame. In the 5 minutes time frame, you have an order flow, something like a rally, base, drop. If it is rally, you have to consider like this: rally, base, drop, because a higher wick. Anyway, prices did not enter today into this zone. We didn't get any trade opportunity. The next one is see, if the risk in this zone is very high, you have to plan type 3 Proxima. That way you have to plan your trades. If you feel risk is very high. But sometimes there are higher chances you may miss the entry. That possibility is also there. And next one is again rally, 1, 2, 3 base candles and the drop candle. And next one is again you have rally, 1, 2, 3 base candles and a drop candle. Actually this is also part of the base, medium size, but the horizon, the imbalance continued from this zone. So that's why I fine-tuned up to this level. And this is the lower time frame, drop, 2 base candles and drop. And this 5 minute zone is the horizon for this entire daily zone, picked up the orders from this area, and then prices moved down. So you can use this as a lower time frame zone as a horizon to the entire higher time frame daily high liquidity zone. That's why we got several institutional order flows in this zone. And the next one is Siemens. Siemens is a 75 minutes high liquidity demand zone. So a very small zone, powerful zone. Several times it provided the trade opportunities. We have a rally, base, rally with the pro gap. And this one is fine-tuned with 15 minutes time frame. And look into the 15-minute zone here. You can consider this as a failed ERC candle as a drop. and then 1, 2, 3, 4 base candles, and then a rally candle. That means almost the same 75-minute zone is occupied as a 15-minute zone, because 75-minute zone is a small zone. Now within that, fine-tuned with 5 minutes time frame. You have a 5 minutes fine-tuned zone, but that is a high liquidity zone. That fine-tuned 5-minute zone is acting as a high liquidity zone. Let me show you. See, this is a drop candle, 2 base candles and a rally candle. Drop base rally. See, prices went up and again came down, picked up the orders, and again it picked up, and again it picked up. After this, entire high liquidity zone formation took place. Even then, prices every time when they are coming, picking the orders, moving up, and also new LOTL zones also getting created from that zone. Multiple times it happened. See here. So from this area, prices entered here, lot of 6 candles, 1, 2, 3, 4 candles, moved in a narrow range. There is a balance here and then imbalance with leg out candle. So maybe you can consider drop, 4 base candles and rally, or you can consider this is a drop, 1, 2, 3, 4, 5, 6 base candles and rally. That way also you can consider the same zone. That means institutions are keep on placing the order, prices move again, picked up the orders and then moved up. Next time again prices entered into the zone once again here. So here also it picked up some imbalance, but leg out is not great. Now again rally, base, rally. So they are adding new order flows into this area. Again it picked up the orders and moved up. Why? Because of this rally, base, rally from this area. But actually origin is from this high liquidity zone below that. And today we are planning our trade in the high liquidity zone area, but prices did not enter. Prices came close to the zone, not entered into the zone. Maybe next time in the coming days it may give you a trade opportunity. And the last one is INFI. This is a 75 minutes high liquidity supply zone, but I am not happy with this structure. Even though I fine-tuned, but I did not really consider for the trading purpose. Go to the 75 minutes. So this is a very big candle, failed ERC candle. But still software consider this as a leg out because it is having sufficient body and that moved out of the zone and it is a large candle. So this is good enough to qualify as a leg out, but I am not convinced by seeing the lower time frame zones. We have a rally, 3 base candles and drop. That is how software identified. But why I am not happy with this structure? Go to the 1 minute candle. This entire candle is from the morning. Where is it? Here. This is the candle. And this is 15:29 on Tuesday, the last trading session, previous trading session. Last 1 minute candle, because of this last 1 minute candle, here something happened. The price sharply came down and moved up. Or are there any freak trades in this last 1 minute candle and that pushed the prices and this candle is resulted? If that is the case, this entire structure is not a good structure. So that's why I'm not really comfortable with this zone, even though I fine-tuned, but my plan was not to focus on this stock. Okay, maybe this zone is having a order flow, one order flow, 5 minutes level. Go to the 15 minutes, two order flows are there, but this is not having a 5-minute structure. See, drop 1, 2, 3, 4 base candles and a drop, and here you have again drop candle, 1, 2, 3, 4 base candles and a drop. Actually it should be part of the base, but I limited to this because imbalance started from these candles. This is the 15-minute zone. The moment I go to the 5-minute structure, and here see the 5-minute structure is not good. This is the area. Somehow I didn't feel comfortable with this structure. This will be violated easily. And here we have a rally base drop with small pro gap is also there. So that's why this is the only one order flow I gave some favor. Otherwise the zone itself, because of this candle, something. Because see, 1-minute candle that made everything. That's why I'm not fully convinced with this structure. If prices would not have come back, then maybe I would have given importance. Within 1 minute came very sharp and again came back. Is it because of a freak trade? I don't know. Generally freak trades happen during a 9:15 candle. But there is a possibility, 9:29 candle, if there is a very huge volume, see here, huge volume here. A lot of price action took place during the last 1 minute time period. When there is a huge volume, there are also chances that sometimes freak trades might happen. But anyway, I'm not really comfortable, but still there is an order flow due to the pro gap. That's why I have given some importance to this fine-tuned 5 minutes area. So this is about INFI trade. Hope, INFI analysis. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.